Good morning. It's Friday, January 17th, Senate Agriculture here. We've had a good week as far as introductions and finding out as a news committee, a lot of good things that have happened previously in this committee and things that, good things that I want to continue on. This morning, we're going to continue our conversations with Vermont Economic Development Authority. We have Cassie Polhemus and Chief Executive Officer. Welcome. What would you like to tell us today?
Thank you very much. For the record, Cassie Polhemus, CEO of VITA. I would like to just kind of spend a couple minutes introducing myself and my team. I've brought along several team members here that I want to make sure also are brought into the conversation if appropriate. So I've been with VITA for 11 years, 6 years in my current position as CEO. Previously, I was Chief Operating Officer, and I was also a lender, actually, when I first started working at VITA. With me today, I have Thad Richardson, who is our CFO, Andy Wood, who is Co-Director of Agricultural Lending, Sarah Isham, Co-Director of Agricultural Lending, and Jennifer Emmons Butler, who is our General Counsel and Director of Closing.
Bless you.
I would love to just take a minute to know who's here in the room. And
well, we'll introduce ourselves.
Yep. Brian Collmore, I represent the Rutland District. And Robert Plunkett, Bennington District.
Steve Heffernan, Addison District.
Joe Major, Windsor District.
Russ Ingalls, Essex District.
Great, thank you very much. So with that, what I would like to do today is I've got about 15 slides to walk through, and it's a big picture overview of VITA, and then some focus on agriculture, which is why we're here. And then depending on how much time we have, I do have a documentary video on VITA that I would love to share, but I also want to make sure we have time for any questions. So I can leave the video towards the end, depending on how the time goes.
Would you tell us in as brief as you want, or as long as you want, what VITA is?
Sure. So let me just start sharing my screen here, because that's what I would love to walk you through. And of course, it's going to give me trouble.
There you go.
Okay.
There we go.
Perfect.
All right. Excellent. So Vermont Economic Development Authority. Why am I not advancing? Let's see. Okay.
I have no idea. I'll figure this out while you chat about it.
Okay, so sorry about that.
No problem.
No
Did not
worries.
have this difficulty the other day, but. So Vermont Economic Development Authority is an instrumentality of the state. We're created under state statute in Title 10, Chapter 12. And under Vermont Economic Development Authority, we have several other distinct entities. One of which is Vermont Agricultural Credit Corporation. Thank you, Andy. Which is our entity under which we do all our agricultural lending. It was formed in 1999 as a nonprofit corporation to provide an alternative source of sound and constructive credit to farmers and forest products businesses who are not having their credit needs fully met by conventional agricultural credit sources at reasonable rates and terms. So one of the things about lending to agricultural producers is that it presents a different set of risk parameters than, say, traditional banks are used to lending to. You've got perishable products and you have livestock and those sorts of assets that take some different type of monitoring and different type of lending. So we have this specialized lending group that is under VITA. And so what you can see here is VITA is the instrumentality, and that is, you know, the externally facing brand, if you will, is VITA. Sometimes there's confusion because in this committee and in this State House, when we talk about VITA, we talk about what everything else except commercial is. And then there's Vermont Agricultural Credit Corporation, which is ag lending. And there's often confusion, but they're actually the same entity. It's all under the instrumentality. We have a couple of other entities as well that were formed for, one is, you know, for small business loans, and one is an SBA, Certified Development Corporation, which enables us to participate in some of the SBA programs, and was wildly instrumental in allowing us to participate as a SBA PPP lender during the pandemic. And we were able to make PPP loans not only for commercial businesses, but for ag businesses as well, and I'll cover that towards the end. So what this slide here is showing is that about a third of our loan portfolio is in our agricultural sector here in Vermont. Okay, and then the other 2/3 make up energy, what we do on the energy side. We do have energy loans that are made to agricultural producers, so there's some crossover there, but we book them in our energy portfolio. And we have small business, and we have loans that we make to development corporations. So for purposes of today, we're going to focus on the agricultural activities that we do, which is, as I say, about a third of our portfolio. Within that portfolio, we've got distribution of dairy being the largest. And then beyond that, there's maple has been growing quite a bit, crop farming, and non-dairy animal production, which, what does that really mean? Non-dairy animal production, is that poultry or?
Beef, poultry, equine.
So what we've seen over the years is, and Senator Colomar, you've been on this committee for quite some time, so you've seen the shrinking of the dairy sector within our portfolio. It used to be the vast majority, and we're aware, you know, farms are consolidating. Some farms have just decided to go out of business. And so we've been doing a lot of measures to sort of soften that landing a bit with some various emergency loans, which I'll talk about towards the end as well.
Yeah, I did quickly glance at your report. So when I was first elected, as I'm remembering, there were about 1,100 individual dairy farms in the state. You have the figure at 495 as of 24, and I think it's somewhere around 440 right now.
Mm-hmm.
So it continues to, unfortunately, from my viewpoint, get reduced.
Yeah.
The number of cows is up and the production is up,
Right.
but there are fewer farms, so they're larger.
Right, right. So as with a lot of businesses, especially in the commodities sectors, it takes a certain size when your margins are so slim to make the economics work. And that's what we're seeing with the small farms, that it just doesn't work economically anymore.
So how does that impact your lending? Because if you're, you know, larger farms need larger monies, smaller farms tend to have lesser, you know, I mean, so are you seeing your lending different as far as towards farms, or is it about the same amount because larger farms need more, or
Yeah.
how is that
Yeah,
trend going?
that's a good question, and I just wanna back up for 1 second. I don't wanna give the impression that small farms cannot make it. There
No,
are
they're
some
right. We
very,
have 'em.
very solid
No,
small
we have
farms
them
out there.
throughout all
Yeah.
of.
But it is
Essex County.
tougher and tougher northern.
Yeah, yeah, and so we continue, that's really our niche, is the small to medium-sized farms. The large farms, tend to, get their financing from larger institutions. You may
Yeah.
know of, like, Farm Credit East.
Yeah.
It used to be Yankee Farm Credit. They are well regarded in servicing the large dairy farms. And one of the reasons that came into existence years and years ago was to fill that gap in the financing spectrum for the smaller and medium-sized farms that perhaps didn't have quite the credit characteristics, say, that a larger institution like Farm Credit East would want. So as far as what we're doing, we're not doing anything differently. We are still out there. Our mission is the same, and we are still serving the farmers the way we always have been. But in recent years, some of them have faced that reality of I've made the decision to get out, and so we work with them. And Andy and Sarah, who are right there in the trenches, sitting around the kitchen table with the farmers on a weekly basis, know what that feels like, and we work through it. And one of the things that is really a strength of VITA is that we can work through that and be patient. Unlike banks, which have regulatory constraints, we operate in a space where we can work through that, whether it's a sale or a bankruptcy or what have you. We're there, and sometimes it takes 40 years to kind of get to the end of the road there.
So just,
Yeah, I'm sorry.
no, go ahead. Sorry.
Just introduce yourself.
Yeah, Andy Wood, co-director of agricultural lending. I just want to add to that, our new business originations, we've seen a decline in dairy, but we've also seen a growth in a lot of other sectors, whether that's especially maple's been a growth sector for us, but then also we look at beef and our other diversified livestock. So we've got a pretty good trend line where we see that portion of our portfolio, all of our non-dairy lending continuing to grow over time, while that our portion of dairy lending has declined. So we do see growth in those other sectors.
As far as able to be more accommodating to the needs of your people that are seeking your funds that other lenders can't do, how are you able to do that? I mean, there must be some designations that you have as a lender that you don't have to comply with some of what the lending other, not to say that you're doing anything wrong at all. In fact, I like the helpfulness, but there must be some designations that you have so you don't have to comply with some of those federal laws and rules. I mean.
Right. No, that's very true. We're an instrumentality of the state, so we don't fall under the FDIC or OCC, or even in the farm credit system, CoBank, which is a large lender, and we borrow from CoBank for our loans to the ag sector. We're not regulated that way. What we do have to keep in mind is we do borrow money from other private institutions, and we have to make sure that we are able to repay our obligations. So we look at that. The state auditor could come in and look at us at any point in time if we're using state money for any of this, which generally, whatever state money we're using is very, very small. It might be for loan loss reserves or interest subsidies. But to answer the question is, we have that flexibility to say, lend more against the collateral than a bank might be able to do. We can go above 70% if a bank is only able to go to 70% because they're regulated differently. So we have that flexibility, and that's a huge part of the, I guess, magic, if you will, that we provide to the borrowers here.
Nice.
All right, let's see. So what programs do we have? We've got, basic farm ownership loans if a farm wants to buy real estate for farming or forestry, make improvements, water conservation projects, and we can refinance debt. This is one of the few areas within our vast array of loan programs where we can refinance debt. We also have operating loans for machinery and equipment, working capital, that sort of thing. And then, as I alluded to earlier, we do energy loans if a farm wants to put a solar array up, or there was a time when we were doing a fair amount of digester loans under a different program. So I mentioned some emergency loan programs that we've been involved in. So we've had a couple of iterations of what we call the Farm Operating Loan Program. And again, this is with help from the state. We receive some state appropriation to help us get farmers through low milk price periods. We leverage that money significantly. So you can see, for instance, in 2009, $1 million from the state went to 125 farms and $7.2 million in loans. In 2010, there was the debt stabilization program. This was a large program, really significant to kind of help a lot of farms manage being over leveraged. We managed an organic transition program for dairy farmers back when that seemed to be the direction that a lot of farmers were going in. And then we had another folk loan program in 2018. And then, as I said earlier, a fair amount of our PPP loans did go to the ag community, as well as most recently the forgivable loan program, which again was state money, was appropriated. That came from Biden's ARPA bill, and 48 loans to ag businesses totaling $3.2 million from that program. So there's been a number of sort of emergency response programs, and that's part of what we do, certainly a large part in the ag sector. I included a slide here just because I wanted to make you aware. There's under Biden's ARPA plan, a reauthorization of a program that was first implemented back, I think, in around 2010 or so, called the State Small Business Credit Initiative. And this is money that every state was eligible to apply, and I believe most states did receive SSBCI money. It's a significant amount of money because it does use the state small minimum allocation in Vermont. Whenever there's the state small minimum, we do pretty well because it's based on, I guess, how many people live in the state of Vermont. And so we applied for it and received close to $59 million. That was the state small minimum amount. And we have divided that money up to use half of it to subsidize interest rates on our loans. The other half is going out in venture capital investments. The reason I wanted to make you aware is you may hear that term SSBCI and, oh, VITA got a lot of SSBCI money, VITA got all this money. I want you to understand it's money that is used to subsidize interest rates on our loans. So we have to leverage that money.
Right.
Okay, and the program has a goal of leveraging it 10 times. So that would mean that for every $1 of SSBCI money, there's $10 of other money that would go into that project. That's not a requirement, but that's kind of the goal. The requirement, the bare minimum is a 1-to-1.
And that's just how you choose to use the money on that. That's what you thought was gonna be the most effective way in your portfolios of what you have. And so it could have been used in other ways, but instead, okay, this is what we think is best.
Right. Based on our experience from the first SSBCI round where we got $13 million and we were very successful in how that was deployed, based also on where interest rates were at the time, and knowing that really borrowers needed interest rate relief, especially in the ag sector. We couldn't do just anything. There were a menu of like options that we could use the money for. And this was one, and it's one that fits really well with our business models and how we do our lending.
And what is the spend down requirement of that? Or do you have a time frame as far as when that money has to be out the door?
Yep, the program is in total, I think, about 9 years. We're maybe into the third year. And I want to actually acknowledge Thad Richardson. He's our CFO, and he's been really the lead on the SSBCI program and for us and getting the money out the door, and monitoring how we use it and leveraging it. But to the point, so how long do we have it? The program's about 9 years, but the way that the Treasury set it up is that it's in 3 tranches, right? So in order, you get the first tranche. In order to get the second tranche of money, you have to have deployed 80% of the first tranche.
Mm-hmm.
So in other words, there's incentive to get the money out there quickly, right? And we've done that. We've already received our third and final tranche. We're one of the few states in the country that actually has gotten as far along as we have in deploying this money. Is that?
Chair?
No,
mean I
that's,
have-
no, that's,
Okay, good.
the House is going to session.
Great.
Yeah,
Sure.
yes, I'm sorry.
Subsidized interest rate, can you explain that? I think I know what it means, but I'd rather have it.
Yeah. No, that's a good question, and I may lean on that. But in essence, it costs us. We incur interest on our borrowing. So let's say we borrow from a bank, and our cost is whatever it is, say 5%, and we then have to earn at least that 5% plus our overhead costs, plus enough to ensure the sustainability of VITA in perpetuity, right? So we have to mark up that money a
So
little
you can
bit
say
to cover
for
all our
arbitrary,
costs.
another 2%, say, to make that difference up, correct?
2 or 3%, right?
Yeah,
Yep.
we're just talking arbitrary numbers. So for the consumer, it's 7% now, that loan, correct? Roughly?
Right.
Okay.
Right. And so then we take a little bit of money from our SSBCI fund and apply it to that loan so that the borrower then, say, gets the 5%, but we're using that money to make up the difference
Buying
for us.
points. Buying points almost as
Yeah.
far as,
Yeah,
That's what
exactly.
I'm, okay.
Yeah. I don't know, Thad, do you want to add anything to that? I probably fumbled my way through the explanation, but.
No, that's Thad Richardson, Vita. She hit it on the head, so it allows us to do what we would lose money at effectively otherwise. So it has allowed us to make loans below market rate farms and below what banks are charging just because of that subsidy. So it's been a big plus, and we get to keep that money and recycle it back in over time. So it stays with the state. It's not a grant program. It comes to us as lending, so it'll be with us forever.
So, yeah, I was gonna ask, it's a revolving fund.
We don't have to, that we can keep recycling that money.
Okay.
In fact, the first round where we got $13 million, we just recycled that for as long as we could. So it's really a boon. It's a great program for instrumentalities like ours and others sort of mission-based lenders. So why has this money been so important? You can see here is trends since 2020 in the dollar amount of loans that we've closed over that 5-year period. If we were to go even further back than 2020, you would see much, that it's been on a decline for many of the reasons that we just talked about earlier. 2024, we've got a nice increase, which is great. And I, applaud our team here. Our ag team has really been working hard to make sure we're still being impactful out there. And if it's, as Andy said, diversifying and making sure that the ag community's needs are being met across the sectors. So being able to provide a lower rate on loans is hugely impactful for the ag community.
How is, we'll say it on the positive side of it. What is the success rate of your loans as far as the people that are taking these loans out and paying them back?
Very successful. Yeah. What I said earlier about being a patient lender, that means our loss rate has actually been very low. We do work through hard times, which means that VITA has to either defer payments or work through some difficult restructurings. But because of the flexibility we have to do that, our losses in the ag sector are very, very low relative to what you hear about and the risks in farming.
Do you have a percentage, a rough idea?
Less than 1%.
That's outstanding.
And are you finding, as far as your loans, are you tying them to capital? So that if something goes out through, you have something to attach to?
Absolutely, everything is secured, and
Okay.
that's customary.
Yeah, but, okay, yeah.
Yeah. Any other questions, or would you like to see the video?
We got
Isn't that your pleasure?
about 14 minutes to get you through, so whatever,
It's a
the floor is yours, so.
12-minute video.
If that's
It
what
does
you'd-
cover all of VITA, so it's not just farming.
If
But
that's what you'd like to do, the floor is yours. You do
Okay.
whatever you'd like to do.
great. Well then, Linda, do you want to take over from here?
I can do that.
Okay. Then I'll stop sharing, right? I don't know that I stopped sharing.
We all need an Andy in our lives.
I know.
I just think
yeah.
it's something very similar.
Oh, there it is. Okay. Thank you, Andy.
Okay, I hope this is it. No, it's not coming through.
Okay.
Can you do it from your end?
I did have luck the other day in
Andy?
another committee.
Let me see if you,
Replace current share.
no, you're,
If I want to
you can still share.
allow.
Okay, and then where is it?
No,
Is
if
it
I
open on
go-
your screen?
Go to VITA and.
And that starts right away, so
It
now.
starts right away.
So go ahead, is it showing?
No.
So now it'd be
The
share.
Vermont Economic Development Authority has helped
Okay, let me-
businesses grow, created jobs.
Okay, I couldn't hear that, okay.
Share. You are screen sharing.
Okay, so start the video and see if it goes.
I think London needs to.
And strengthen the
stop it.
community.
Hmm.
I think it's on you right now, Linda.
On you? Oh, thank you. Okay, now try.
There you go.
Like in our Vermont hometowns, Vita knows the power of
Expand it.
and works with entrepreneurs and farmers to
Down,
bring
down.
those dreams to life. It first started as a way to develop industrial parks and attract manufacturing businesses with the intent on creating new sustainable jobs to support and grow the Vermont workforce and economy.
In the 1940s, the state lost most of its textile industry, so the state had a pretty concerted effort to go outside of Vermont and attract manufacturing into Vermont.
We had no steady source of new companies to come in to offer jobs or to raise the standard of pay or whatever.
We had to build physical industrial parks, and Vita was created really to be the financing partner for the state.
You have to buy the land and develop a park, you've got to improve it, and then you've got to go out and find companies to buy land. And so the money is borrowed by the development corp. There's interest on it, and so Vita has to kind of sit and wait and have confidence that there'll be enough lots sold eventually.
They would be very patient and they would wait until we sold a piece of land and they would take part of the proceeds back to pay the interest and pay the principal.
We could issue taxes and bonds, and banks could buy them for quite a wide variety of bigger projects. Those would help those companies finance their projects more cheaply, and the fees that we made on issuing those taxes and revenue bonds helped fund the small business loan.
It was a very methodical process of developing the parks, but it also took a pretty good sales endeavor.
It became clear that the reputation that Vita created could prove to support other areas of the Vermont economy. In the 1980s, Vita responded to the needs of local farmers during a time of highly volatile milk prices. Today, Vita's support continues to keep Vermont's agricultural traditions strong and vibrant.
The agriculture economy is cyclical. It can go up, it can go down. It's a national, international market.
Agriculture has always been very key to Vermont's economy and very well supported by the legislature.
Vita was asked to step up and help small and medium-sized dairy farmers who had a lot of debt.
Uncertainty in the agricultural business itself propelled the legislature to want to afford to agriculture the same types of beneficial lending that the industrial side of the economy was getting.
We see cheese really as a powerful force for good, a way that we can leverage different markets to deliver livable wages for the farmers that we work with, and to concentrate wealth back in our community in a way that commodity markets have failed to do.
When somebody walks through your barn and starts looking at your cows to buy the whole herd, and you have that feeling in your stomach, you know that you're not ready to get out.
I thought we were on the farm. I didn't really think there was any other option.
We had no idea that there were so many options out there. We really thrive on looking at what the opportunities are and the ways that we can really be helpful.
In order to succeed here, we need to operate at just a higher frequency and deliver something that is just heads above the rest.
And through the years, we really diversified what we did. We went beyond the debt stabilization program to really providing financing for all types of agriculture and now forestry as well.
Vita's been at the table to work with those farmers, work with those businesses to help them grow and evolve. And Vita plays a role in that changing landscape where they can come and get that financing to kickstart that idea and their dream.
As it became evident that Vermont was becoming more and more of a tourist destination, Vita expanded in the 1990s to support ski resorts, hotels, and attractions welcoming tourists from around the world.
It was incredibly helpful for the tourism community on both sides of the mountain, in particular the resorts, to expand their operations and investments.
The ski industry, by definition, is capital-intensive business. We've been as frugal as we could possibly be, as I think anyone could be, but you couldn't turn it around without capital. We weren't in a position to be bankable at all. And so really our only banking partner out of the gate was Vita. Traditionally, it's not thought of as generating huge jobs, numbers of jobs, the way manufacturing is. So it's a slightly different policy goal for the state. It's bringing outside dollars in, and that's tax revenue. So that's important.
In 2013, Vita launched a renewable energy program to create a greener future. From solar power to energy efficiency, Vita is building a cleaner tomorrow.
Vita was working as an instrumentality of the state of Vermont to form what was really among the first programs of its kind in the nation.
Most of our lending in that space has been in the form of solar energy, either for businesses to install solar at their facility or standalone solar farms.
The role we play is to help get businesses or sectors or lenders over a gap. And that was a big growth area for us, and now we are seeing that other lenders are stepping in and filling that gap.
Across the nation, interconnection of renewable energy projects to the grid is one of the most pressing issues facing not only our industry, but all of us. I think we have seen scientists clearly demonstrate the effects of climate change.
When tough times hit, like floods or global pandemics, Vita steps in with emergency loans to keep businesses strong and communities resilient.
When the pandemic struck, Sam and Vita in general just really jumped in and understood the struggles that we were going through at the time, and really the uncertainty that everyone was going through at the time, and really just held out their hand to help us, and it was really helpful to have Sam and everyone at Vita. They had our backs at that time.
Well, it was a definite need. I mean, it was a disaster, natural disaster, that a lot of the businesses were affected. I mean, you have to think about repayment rates when you're lending money. And the repayment rate was astonishingly high for businesses that had really been hit very hard. So we underwrote the loans quickly and closed them quickly.
Vita is more than a leader, it's a partner. By working with banks and credit unions, Vita creates a powerful foundation for growth, ensuring Vermont businesses compete not just locally, but nationally.
You've got the legislature. We have to have good relationships with the legislature. The business community, generally, our borrowers, state government, the local development corporations. So there's lots of banks, and then the capital markets now that Vita borrows from have to be had. So there's really quite a few different constituencies to deal with.
And what was always interesting and encouraging about Vita was the recognition that they were not the primary lender, if you will, in making these projects happen and making these deals happen, that they were focusing on working with community institutions and Vermont financial institutions. And that partnership really was embedded in state statute decades ago. And again, as Vita has evolved over the years and the decades, they've stayed true to that recognition, even with the new programs that they've been given by the legislature.
We were able to work with the banks, and that made a real difference because the bank could take the first position and we can take the second position and get the loan done.
That was very important because many of these companies we lent to were very good companies, but they were weak. They didn't have a long performance record. Vita provided that comfort that the banks needed so the loan could be made.
At Vita, creating jobs means building a future for Vermont families, supporting innovation, fueling economic growth, and focusing on wage growth. Vita ensures Vermont remains a place where businesses thrive and workers prosper.
With Vita, Vermont's been able to grow in a way that is
absolutely perfectly fit for Vermont's character and quality. The emphasis on the growing quality businesses and creating high value added jobs.
So the growth has been pretty significant, and our business has grown. You know, our top line has more than doubled since we've been here, approaching our 10-year anniversary here at this place, and where we were able to borrow a big loan to build a new barn.
We went from just the four of us. We're operating at 80 to 90%, and we have a team of 82, 83 full-time year-round.
We have 400 people on the payroll, but when you multiply that by the families involved, the businesses involved, the amount of money that we put back into the local economy, you're talking about thousands of people that are positively affected.
But you can't tell by looking at a solar array the impact that it had on the community. So with Green Lantern alone, the benefit to the state of Vermont is over $1 million a year, every year from our arrays.
As we look to the future, VITA's mission remains as strong as ever, helping Vermont businesses grow, innovate, and thrive. With a legacy of supporting hundreds of world-renowned companies and local entrepreneurs, VITA ensures that Vermont's economy stays competitive and vibrant. VITA is also a respected partner, working with the government and its partners to provide support in times of crisis and shape the industries that keep our state resilient. By adapting to changes in industries and embracing technologies and programs that align with its mission, VITA will continue to build a bright, sustainable future where dreams take root and flourish for generations to come.
All right, I know, am I on?
Yep, you're good.
Okay.
Yep.
I know we're running short on time here, so thank you for indulging me on this documentary celebrating our 50th anniversary. Just want to clarify also the discussion about working with the banks and taking a subordinate lien, that really applies more to our commercial business.
Mm-hmm.
On the ag side, we are generally the primary lender, and we're not the subordinate lender. So just to make that clarification.
Yep.
Thank you, Mr. Chair. So Cassie, are there individual underwriters and or does it have to go before some sort of group to assess a risk situation?
So we have a loan policy that guides loan approval authority. And depending on the size of the loan, it will work its way up from an individual to an internal loan committee to then the board. So the largest loans, the board approves, but we approve the vast majority internally because we've been doing this for 50 years. And the folks that we have on our staff are trained in credit analysis. And as Thad referenced, our credit quality is very, very good, especially given the type of lending that we do. So folks like, Sarah and Andy lead our team, and they've been doing this for years. Sarah's in her 31st year here at VITA. So we've got a really strong staff of folks. And that allows us to be responsive and make those decisions quick enough to get the money out so that, the borrower's not waiting for monthly board meetings or quarterly board meetings or that sort of thing.
Great. Thank you,
Mr. Chair.
Yeah.
What's the largest ag loan you believe you've done?
The largest I'll answer first and say the largest we can do is actually in our statute. And we've never come close, I don't think, to hitting that. It's based on, I don't know, right now it's over $5 million, I think. And it's $5 million. And that's driven by the Farm Service Agency guarantee percentage, which is kind of arbitrary right now. But anyway, that's the largest. Our average loan size is probably 200,000. And our largest borrowers from a relationship standpoint on the ag side now are in excess of a couple $1 million or, okay.
So how do we come into play with you as far as in this committee?
So what, generally so this year there is a budget item that, is asking for $1 million appropriation to continue our interest subsidy programs for the ag sector. As I showed earlier, that has been highly impactful, but we are basically out of SSBCI funds. As I said earlier, we've deployed those. So what I would love is to be open to a conversation to come back again in the future to talk about how we would use that money, how it would benefit the borrowers the most, and what kind of impact it would make.
So a little training on our part, new board, okay? So just to help everyone, how does that ask come to us?
So it's in, the Secretary Tebbetts put it into his recommendation for the governor's budget.
Okay.
And all I know right now is that until the governor announces his budget on the 28th, I don't know whether it will stay in that budget or not. I'm hoping that at least some money stays in it, and if it does, then we would be here going through the legislative process to get the legislature's buy-in on it, and it would start with this group here.
Sounds good. Yes, we will welcome you back. You know the process. We're gonna have to move on to our next.
Yep.
We appreciate you
Thank
very
you
much.
for letting me go
Appreciate
over
all that
time.
you do. Thank you for taking the time, and we'll look forward to having you back.
Great, thank you very much.
Thank you. You all have a good weekend.
So Senator Heffernan, I have to ask you, are you related to Sarah Heffernan?
Yes, 4 Blue.
She works with us. You probably know.
Yes.
Yeah,
great,
yeah,
great.
she's actually one of our credit analysts. Works with Andy and Sarah, and she's terrific.
Sarah, that she has 4 Bloom Farms, right? Or is that a different Sarah?
Four Blooms, that is Sarah.
Great, yeah, all right.
Yeah.
Nice.
I kept wondering as I was driving through Addison County and seeing your signs, I'm like, how many Heffernans are in Addison County that are not related?
I think all in Addison County are.
Well, we love Sarah, she's great.
Yeah.
Awesome was in your invite.
Thank you. Thank you very much for your time.
Thanks, Cassie.
Thank you very much.
I'm just gonna set up the share.
Welcome, Mr. O'Grady. How are you?
Well, good morning, everyone.
Should I take somebody's?
Nope.
So I think we have one.
Yep. You had an extra.
Yeah.
That one for you, Michael.
Great, thanks, Kathy. I would, one of the reasons that VITA comes in here is when there's changes to the program, anything that's agricultural related I'm gonna talk about some things that were just done last year.
Oh, good, okay,
So,
great, I'll leave you to it.
As you can see, I like to ask the monies and also, obviously, how the ask comes to us. You know, how do we see it? Where do we go? I mean, where are we gonna see this? You know, what you did in the past, and this one right here was $1 million, so she described and explained why she was asking for the money, so I didn't have to ask, well, what have you typically received in the past, because it really doesn't make a difference to the process, but I always like to know, always like to follow the money and how it gets here.
Yep.
No, I did not. I apologize.
And Michael, you're ready, anytime you go, take the time you need or whatever,
Okay, so-
when you're ready, tell us.
there's a document that I have hard copies of, and then Linda will put up on this is just a review of what the committee did
last year, both in legislation and those bills that passed out of your committee, but may not have been enacted, but moved in another respect or were highly, had a lot of action. And so I'm just gonna walk through kind of by the number of the act that was enacted. Before I get into the specifics, there's a miscellaneous agricultural subjects bill. The agency proposes subject matter that they would like changed in their statutes of their jurisdiction. Generally, that's split up between the House and the Senate. So there's a House miscellaneous bill and a Senate miscellaneous bill every year. People will tell you that it's, oh, they're just technical changes, but there's a lot of substantive things that change in the miscellaneous ag subject bills. In 2023, the Senate miscellaneous ag bill, it clarified the agency's authority to quarantine animals when there were chemical agents in the animal, including in the milk. It updated the state's laws regarding the sale of eggs, which hadn't been updated since the 70s. It increased the maximum amount of administrative penalty the agency could assess, and it clarified that municipalities cannot assess stormwater fees on projects subject to the RAPs. Farming is generally exempt from municipal stormwater regulation if the farm is following the RAPs, but some of the towns with stormwater utilities were assessing farms an impervious surface fee for impervious surface on the farm. And
New committee, RAPs.
Required agricultural practices. They're kind of the baseline that farms have to follow in order to comply with water quality requirements in the state.
Okay.
And I don't think I talked to you about.
By the way, I appreciate that, Chair, because acronyms are.
Oh, there's tons in this.
Yeah.
Not as many as health and welfare. But.
I don't think I talked to you about ag water quality on Wednesday, so that after I go through this table, I want to talk to you about that because it's going to be a big issue for you this year. So towns with stormwater utilities were assessing farms and impervious surface fee, and on some farms it was a large fee. There was a $40,000 fee in Franklin County. And so farmers were very upset and wanted to clarify that the fee could not be assessed against them. And that's what you did in 2023. In the House miscellaneous bill in 2023, there were a lot of some basic technical changes, but the one big substantive change was, you all know the ag fair and field days. They had a rule for how that they would award grants for years, but that rule was adopted under the Racing Commission authority, and nobody understood that. And so when there was an effort to kind of clean up the authorities that were defunct, the Racing Commission was repealed, and when it was repealed by law, any rule adopted under it was repealed as well. So there wasn't a rule to award the fair and field days grants, and consequently, you had to enact a new, it was basically the same rule, but it had some additional authority in it as well. That was one of the big things from the House miscellaneous bill from 2023. The other big one, you may hear from your landscapers in your district. You required those persons who were installing nursery stock to get a nursery dealer license so that the agency could know where nursery stock that potentially is contaminated is when there was an outbreak. So that is something that I don't know if a lot of landscapers who do installation are aware of yet. The agency is rolling it out slowly, but that's something to be aware of. In 2024, the first act that was enacted related to poultry slaughter, the federal government has what's called the Poultry Products Inspection Act, and that requires every slaughter of poultry to be inspected prior to sale in interstate commerce. But there are exemptions to that, and one of the exemptions is what's called the 25,000 bird exemption, that you don't need to be inspected by the state if you're slaughtering less than 25,000 birds a year. And Vermont has that exemption, but when Vermont wrote it into its state statute, it said that the persons operating under it could only sell the whole bird. And that is a problem for some of these small people. It really restricts their market, especially when they're going to a farmer's market or selling at retail. So last year, which was allowed by the federal government, you expanded that exemption so that those people operating under it could sell parts of the bird.
Can I ask, and forgive me because I should know, the 1-year sales tax exemption on those advanced wood boilers expired, and we never went back in and extended it, huh?
You do it every year. It just winds up in different bills.
Okay.
Senator Perchlik is the one that really kind of instigated that exemption and is diligent about keeping it up.
Okay.
So sometimes it goes into energy bills, sometimes it goes into the ag bill.
Okay.
But it usually is continued each year. You also designated the bear's head tooth mushroom as a state mushroom. You'll get a couple of those. You have the turnip and a few others. It's usually in response to a high school class looking for a project, effectively. The 2024 Senate miscellaneous ag bill, it changed a couple of water quality financing programs to make them more palatable to farmers, including the Vermont Seeding and Filter Strip program. And it basically just gives farmers better terms. One of the things that it did is made several changes to the services and eligibility for services under the Vermont Ag Credit Program, the VITA program that you were just hearing from Cassie about. Well, it did a couple of things. It allowed for financing for farmer housing, which has been a big need. It reduced the residency requirements so that if you had a program or a corporation that was operating in Vermont but might have been cited its corporate headquarters in New Hampshire, you could still fund that entity through VITA if certain criteria were met. The other thing you did last year in that bill is that you prohibited pet shops from selling dogs and cats beginning July 1, 2024, and you prohibited the sale of the paws and internal organs of black bears.
Mr. Chair?
Yes.
Counselor, is that puppy mills that we're talking about?
Yep.
No, it's pet shops. So there was only one pet shop in the state last year that was selling dogs and cats. And the act allowed that pet shop to continue as long as they weren't expanding the number of animals that they were selling on a year-to-year basis. So that pet shop can continue, but for going into the future, new pet shops or pet shops that weren't selling prior to July 1, 2024 cannot sell dogs and cats from the pet shop. Birds, fish, reptiles, what the advocates call the smallies, the hamsters, the guinea pigs, the mice, the smallies, they can still sell. I know way too much about them. We'll get to that. The House miscellaneous ag bill, you amended some of the other water quality programs, financing programs like the Farm Agronomic Practices Program. Which I think is going to be really helpful, is you allow pesticide applicators to be certified remotely. In order to apply pesticide on a farm, certain pesticides, restricted use pesticides, you have to have a certain certification, and that means you have to go through mandated training. And the training used to be you'd have to go to a site to do it, and for farmers sometimes it's difficult to find that time. And so now they're able to do it remotely through a certified trainer. One of the big bills that you did last year was you banned the use of neonicotinoid pesticides on certain crops, or regulated its use on certain crops. And you banned the use of treated article seed when it's treated with neonicotinoid pesticides. Neonicotinoid pesticides have been connected to the loss in bee populations, pollinator populations over the past decade or so. There was a bill in New York to ban their use and to ban the treated article seed. Vermont went a little bit further than New York, but also tied its implementation to New York's implementation. And that was to ensure that the alternative seeds would be available. One of the concerns was that most of the corn seed and a good percentage of the soybean seed is treated. And if you take with neonicotinoid, and so when the ban goes into place, farmers were concerned that they wouldn't have a suitable alternative to replace those. But New York, which you may not know, has a much bigger dairy and much bigger farming industry. The amount of corn they plant is exponentially greater than what is planted in Vermont. And so they have the same ban. Seed dealers basically said that they will have to accommodate that. And if they accommodate New York, they should be able to accommodate the demand in Vermont for those seeds.
Yes. So, well, Michael has correctly pointed out exactly what happened. Just for reference, the Senate Agriculture Committee last year had an effective date of 2031 when it left this bill, or when it left this committee room on the floor. And I reported the bill. It was pushed back to mirror New York's effective date. The feeling, I think, on the part of the Senate Ag Committee last year was we wanted to at least be able to take a look across the lake to New York, because, in the scope of things, even if you added New York and Vermont together, we're not talking about a great deal of the seed production in the country. The Midwest is way, way, way bigger. So we wanted to be able to at least look across, and if New York was having obvious problems getting manufacturers to make those seeds available, we wanted to be able to react to it. That was our thinking anyway, but we did not prevail on the floor, so the date was moved back to mirror New York's, and we'll see what happens.
So some of the bills that came through your committee but weren't enacted as acts were put in the appropriations bill. One of those was a small farmer diversification program. There's a lot of interest, especially on small farms, to move away from dairy or organic dairy into more diversified farming. Because as I think you heard, the dairy price market can be very volatile. And so some farmers are trying to move away from that to something that's either vegetable based or value added based. And so sometimes they need assistance to do that in the small farmers program. It originally was supposed to be $350,000 of grants per year. It was reduced to $150,000 for 1 year. I expect that you will see, or you may see, you may not, from the Agency of Ag, a proposal in their budget to continue it or not. So that's an important, for the new members, you will have an opportunity to opine on what's in the Agency of Agriculture's budget. The House has a kind of official process where they send a letter out to everyone with each agency's budget that's within the committee jurisdiction. Senate is a little bit more informal. It's the same concept. Look at your agency's budget, talk to the agency about what they're proposing, and then recommend changes if you believe that they are necessary. So you will have an opportunity to look at their budget, just as Cassie was saying, you looked at VITA's budget and what they will propose. $1 million, I think she said they're looking for an additional. The other thing that you will see, and you'll see this regularly, is when there is an economic downturn, whether there or a disaster, weather or otherwise, farmers are often at the front of the population that's negatively affected. And for example, over the past few years, with inflation as it was and the cost of inflation, the organic dairy farmers had significant negative economic impacts. First, fewer people were buying their products because they're more expensive, and people were moving away from higher value products in the grocery stores. And then the war in Ukraine actually impacted their feed supply significantly and required them to try to get feed from other sources, including India, and the costs were higher because the supply was so much lower on the global market because of the Ukrainian war. And so they were struggling. They came to you, both the agriculture committees, to look for a program. They originally looked for $10 million. You settled for 6.9. All 6.9 was used. And there actually you had to do a supplemental appropriation to get some additional money for those that weren't funded. You're going to see asks like this. You're probably going to see an ask like this this year for farmers who are impacted by weather-related events. And it's probably going to be bigger than 10 million in the ask.
Is that going to be tied to the money that Secretary Tibbetts was talking about yesterday, of getting some monies from the feds? I mean, I think they were talking about the New England pool, or it was maybe New England, Hawaii, and someplace else. We're looking at getting $220 million.
So that's the federal disaster relief, right? And I don't know how much of that is going to be available for crop reimbursement and or losses due to weather-related events. And that's a great. I mean, that's a tie-in that the agency and you all will need to figure out how you're gonna move that money and what it's gonna be available for. The proposal that I've seen is really about an ongoing effort, not just a one-time, or not just to have address the emergencies happen from flooding, et cetera, from the past few years. It's to have a program that's always available for these emergencies, because it's not just the flooding, it's the frost that happened like 18 months ago. There's the wind events that happened on the west side of the state. There's things like that. And there's concern that they're going to continue or increase, as volatility of weather is what it is. So that's something you will likely see, whether it goes into the big bill or it's independent, I don't know. And then the last bill that you spent a lot of time on, and it had some political traction, was the fair, an act relating to the fair repair of agricultural equipment. It passed the House, it passed out of this committee, it passed the Senate, but the Senate proposal of amendment that went back to the House wasn't as happy with as their original. So they proposed an amendment to your amendment, and that's where the bill died. It just honestly ran out.
I'd forgotten where it had died, and I knew it didn't pass, so thank you for that.
We never took it up again.
Yeah, it just, from my recollection, I didn't staff that bill, but you ran out of time.
We did.
And
it was in the last couple days of the session. And it would have been, I want to say impossible, but it would have taken a lot of work to kind of open it up. And I think the feeling on the part of many in the committee was, let it go.
Right, and at that point, you would have likely have had to go on the conference committee, because there's what's called the third order of amendment.
Yeah.
And you were at that third order. After you have 3 opportunities to go back and forth, you have to go to a conference committee, and conference committees, especially the way that Senator Starr ran them, took a little bit longer because of the way he tried to manipulate them. So those are the bills that you or acts you worked on last biennium. On Wednesday, we talked about the PFAS issue. The other issue that I think you will likely hear about, if not have the bill in your committee, is the agricultural water quality bill. So, and this is complicated, and stop me if you have any questions. The Federal Clean Water Act requires permits for certain types of discharges. And one discharge that it requires a permit for is discharges from a concentrated animal feeding operation, which is a farm that has livestock, and it also has a production area where the livestock are fed or held for 45 days or more in a calendar year, and there's no vegetation in that production facility. So those are basically dairy farms in Vermont. Mm-hmm. And so EPA has delegated the permitting responsibility for all of the Clean Water Act permits to Vermont A&R. But when EPA adopted the CAFO rule, the Concentrated Animal Feeding Operation rule for discharges, in that rule, it had a preamble statement that encouraged states to establish programs that prevented farmers from having to get a CAFO permit, a Clean Water Act permit. And they gave an example of states working through their state agricultural agencies to keep farms out of the Clean Water Act jurisdiction. And that's what Vermont did. We created a program at the Agency of Agriculture, the Ag Water Quality Program. You'll probably see Laura in here eventually. And that program prohibits farms from having discharges. And if you don't have a discharge, you don't need a Federal Clean Water Act permit, because Federal Clean Water Act permits are only for actual discharges. Advocates have said there are actual discharges that A&R should be permitting, and A&R is not permitting. They petitioned US EPA to de-delegate the state and withdraw all of the Federal Clean Water Act permitting. Not just CAFOs, it would have been stormwater, industrial discharges, municipal wastewater discharges, municipal stormwater, everything. Because that's how de-delegation works. EPA can't just say, oh, you no longer get to issue the CAFO permit. It says you no longer get to issue any of the permits. But EPA also has the ability to order corrective action for the state to fix it. And that's what they did. They told A&R, hey, you need to fix your CAFO permit program. You need to actually go out and inspect farms for discharges. You need to require those that have discharges to get a CAFO permit. You need to inspect what's called the nutrient management plan underneath the farm's ag water quality requirements. And you need to basically staff up and finance your program better at A&R. So A&R was given until December 9th, 7th or 9th to come up with a proposal. They proposed a way to meet EPA's concerns that would keep the ag water quality program at the agency, but improve the Agency of Natural Resources CAFO permitting program. So that's the administration's proposal. Well, the advocates don't like that. The advocates want to take all of the ag water quality program from the Agency of Ag and put it into the Agency of Natural Resources, which is something you can do, but it's a policy decision for you. I don't think EPA can order you to do that. I don't think they have the authority to tell a state, no, you can't have an Agency of Agricultural ag water quality program anymore. They can tell A&R, hey, you need to do your Clean Water Act delegated permitting better and meet the standards for that. But they can't tell the state that they can't have an ag water quality program anymore. That's going to be your policy. That's the tension. Do you go with the administration's proposal, kind of keeping the way that it's set up now, but strengthening A&R's CAFO permit program? Or do you do what the advocates want and bring everything into A&R? One is harder than the other, right? To take the entire program, you need to decide which staff you're going to bring. You're gonna have to probably do some unioning, kind of. Maybe some staff don't want to move, and whether or not they have rights and because some of the staff that are in the ag water quality program do things like engineering for the projects that the Agency of Ag finances. Are you going to move that program over to A&R? And if not, if you keep some of that engineering need, those engineers can probably say, I don't want to go to A&R. Right. And so, and you've got people that, like Rob Achilles, the head engineer, who could probably retire if he didn't want to. And then there's all this kind of like, you have
as your jurisdictional battles about, right. Well, what are they even doing in our business over here? We don't want to be over there because then we're going to lose what little power that we have or pull that we have and able to write policy and all of that. So yeah.
So that's a big issue. I know there's probably going to be a bill proposed. I don't know if the administration is going to propose language or not. I would expect they would, but I expect it's going to be much narrower than what the advocates who want to shift the program to A&R will introduce.
So, question for you. So, what you just said, you're always going to have interagency battles, you're going to have agency battles, you're going to have state battle, you're going to have federal battle, you're going to have EPA battle, all that stuff. On election years, what we have coming up right now, and a lot of these things that are going on, historical knowledge for the committee, how much do you see typically, or do you see a lot of different rules that we're fighting over right now that end on election day? Back and forth and back and forth. A lot of these battles you're chasing now, but you didn't get a chance to battle them for 4 years because it wasn't important anymore. So what do you see as far as, on election year battles when all of a sudden the new administration comes in?
You sometimes that dynamic, new administrations will lead to less enforcement or different interpretation. But what inspired EPA to act here was what's called, it was a petition by the advocates to EPA to say, hey, you're not doing what you're required to do. That's a prelude to litigation. So the Federal Clean Water Act has what's called citizen suit authority, and it allows any person to sue another person that's violating the Clean Water Act, and if the regulatory agency is not diligently enforcing. That rarely happens, because when an individual wants to bring that claim, they have to notify the regulatory authority first and give the regulatory authority 45 to 60 days to diligently enforce. So you never see that person versus person, because the agencies step in and say, all right, we'll take care of it. But there's another facet of citizen suit authority. People can sue US EPA for not doing what they are mandatorily required to do. And one of the things US EPA is mandatorily required to do is to oversee delegated states and make sure that the delegated states are meeting their requirements for permitting. And that's what EPA said that ANR isn't doing. ANR is not meeting its requirements. So yes, there might be a new administration that say that we probably wouldn't have issued that letter that said ANR had a problem, or maybe it was less of a need for a corrective action from a new administration. But you already have this out there, and you already have advocates that are petitioning for action. So I don't know if the new administration's position is really going to change the dynamic that there could be litigation to force withdraw the entire program. Remember, you can't just withdraw one part of the program. It would have to be all of it. To me, that because you're talking about, if all of the CAFOs in Vermont needed a permit, that's like 500 farms right now, 550, I don't know what the number is, Anson. But there are thousands of other permits that are issued. Construction general permits, your wastewater permits, every year. Is it worth it to take a subset of that 500 versus the thousands? And I personally think that that's going to be difficult policy for the General Assembly to look at. But that's part of the conversation.
Yep, so, yeah. We have a lot to, we'll see what comes our way, is what you said, but.
And I don't even know if the bill gets introduced, where it goes.
Right.
I've done water law here for 20 years, and most of the ag water quality bills start here, but then go to the other committee. I don't know what your leadership is going to do. That's up to them with the advice of the secretary, so.
And I've, again, as I had said the other day, the Committee of Natural Resources and myself, the committee chair, and I have actually had some brief conversations about what we will share and how we will share, and as they go back and forth. So I imagine that we will be having some more conversations with that committee. Any questions?
Thanks, Counselor.
Anybody need a few minute break before we get to the,
Sure. Yeah.
Yeah.
Your 20 years of experience shines through. For better or worse.
There was one moment I had to cut you off.